Baby girl, you know I see you. Yeah, with the love to the morning. Yeah, with the love. Yes, good evening, everyone. Good evening. Good evening. I believe you can all hear me. All right. So you can see that we actually came in with what we call bedu music. All right. So yes, hi everyone. Hi everyone. Hi. Let me see if I can switch on my video and if this place is not dark. Okay. So hi everyone. Hi. In case you can share your own video too, let's just say hello to ourselves. So, nice to meet you guys. And I will say a very big well done to you. So you can see that we actually started with a cool music. So I want everyone to feel very relaxed. Right. This is not a teacher to students. Well, we are going to run it as if you are my professional colleague. You know, the way you and your colleague you kind of relate is always different from the teacher to student thing. So that's the way I want us to also relate. So just type something in the chat box. Let's get to welcome ourselves. Yes, can type any slang. Just be free. It's not a student to teacher thing. Right. So let's just say hi, hello, what's pumping, happy resumption, just don't type the normal typical hello. Just type something funny, something chilling, something interesting. Hi, hello, right? So all these are funny trending slang, right? Everybody. Which other one? Just type something funny in the chat box. Right. So I just want everyone to feel relaxed and know that yes, we are the same. We are the same. Yes, don't mind me. So just type something funny in the chat box. So I think the weather is cool over here. Just something funny, right? So yes, good to have every one of us. My name is Victor Ogodele. Just me as your colleague. Yes, leave every other thing you've heard about Victor before. So we are both here to learn one or two things together. So we're going to make it very practical, and most of what we are going to do we are going to do it together. Yes, so I'm going to make it there's something we call role learning, which has not actually been transformed or anything. So the normal course, you go online, they use scripts, they've tried to delete something, to all those things that were well arranged. But this one, we're going to make it raw. So we are going to do most of the mistake you will likely be doing, right? How you get to correct them, how you get to know if what you are doing is making sense or is not making sense, and the whole thing. And you can ask at much question that you need to ask. So let's get straight into it. All right. This session is also being recorded, and the recording would be shared with everyone after this session. Yes, so I will always upload that on my YouTube channel so that you can go there, watch it anytime you feel like doing that. So once again, very big welcome to everyone. Let me switch off my video so that we can concentrate on my slide. So I believe you can all see my slide, right? Then you can see my slide and you can hear me clearly. Kindly confirm so that I'm sure we are together.
Yes.
Okay, yes, thank you, Isra. Thank you. Okay, so fundamentals of corporate finance modeling. And one thing I must say that you guys must really applaud you for this. Back then, in our own school days, there was nothing like this kind of opportunities, right? And few people that also know this modeling thing, they just decided to hide it. Now, let me tell you, this is one great skill that's really helped me. So maybe one of these days we can have some I'm not good at motivation, but I'll just tell you my own real life story, how this modeling has really been of great help to me. Yes, it has taken me places where I never thought I could be. My name gotten me some great awards I never expected I could get in my whole life. I just won one award not quite long, Financial Modeling Trainer of the Year globally. So I'll be like, wow. And that was the first time it will be coming to Africa. So trust me, this is a great skill you want to have. I'm a self-taught financial modeler. I taught myself financial modeling. So I kind of understand the best approach when it comes to learning it the right way. And I was also a trainer. So everything just kind of aligned together. So welcome to the course. don't let me bore you more about myself. We can have another session where we discuss that. So welcome to the session. Let's take a look at things we'll be discussing today. I think we just have like 1 hour. I like keeping to time. So corporate finance modeling approach. Then we take a look at structure of a typical financial statement, because that's what we are doing when we are talking about corporate finance modeling. Is that you are analyzing the financial statement or you are forecasting it. So which means you as a corporate finance modeler, you must understand what each line item in your financial statement, what is saying. And then we analyze the historical performance, which we are going to do that with demo. So ask as much question as you feel like asking. Yes. If I cannot answer you, I'm sure I will still be able to answer you. Max, I'll get back to you. Just ask. Don't worry, in case it does not make sense. You might feel it does not make sense. Out of no sense, sense is involved. Yes, yes. Funny thing, I will tell you that most of things are actually learn it from people that are more like novice. You just say, what about we do this, that? You'll be like, okay, that kind of makes sense. So please ask as much question as you feel like asking. So approaches to corporate finance modeling, things you need to know about corporate finance modeling. And I would like you to learn this the right way. Yes, you can go through thousands of courses. They might not be able to lay it down the way I'm going to lay everything for us. So let's get started. We have two approaches to corporate finance modeling. And when the approach is more like the background knowledge that you need to have, that you yourself you need to understand. We have two approaches to it. Luckily, most people focused on one aspect and leave the other aspect. Then when they need the other aspect, it becomes difficult, because that's more like the first thing they're supposed to understand. And that's what we focused on in this our session. We have the mechanical approach to corporate finance modeling. And when we talk about the mechanical aspects, what we are basically saying is you understand how business or businesses, how they are being run. Understand how management think about business, because that's the whole concept of financial modeling. Accountants, they are more like historically focused about what has happened. They do the reporting for us. Now, finance is futuristic, which means, yes, this is where we are now. Our accountants, they've given us that report. How can we now make use of that report to forecast and look into the future? The second one is now what we call the artistical part of it. Now, most people usually focus on artistical part of corporate finance modeling. You go online, that's what you see. Then you come back, you are on your own, you're trying to sort things out, and you just get stuck. So the artistical part is we just go to Excel, we create our structure, right? We apply our modeling concepts, our modeling components, inputs, calculation, and the output, and the whole thing just end there. But it's way beyond that. Now, in dealing with this, first thing is, hey, I need to first understand what is happening in the business. Take a typical corporate financial report, look at the financial and be able to say something. When it comes to due diligence in finance, that is more like what they spend their time doing. What can I see from here? Now, based on that, it now, you understanding that approaches, right? You also need to understand the some fundamental things that are also tied to it. And one of it is what we call 3S in financial modeling. This was developed by David Brown at D Brown Consulting. So I need to give that respect, right? So I was working in D Brown as a trainer. So this concept was developed by him, and he's saying whenever you are building any model, you must always have a story, and in you having that story, you must have one particular learning objective. Oh, I want to forecast a financial statement for Nestle, for UAC, for MTN. Why am I doing that? Because that's the main thing. Why am I doing that? When you go online and they say, oh, this company is currently valued at this or so amount. Basically, someone developed a model and was able to come out with that value. Able to tell you, oh, this is the share price. Oh, we want to say, how will this business perform in the future? So you must always state that objective. So which means story is number one thing. Why am I building the model? Because it will guide you in doing some things. Now, corporate finance is very, very flexible, and it's all about, does it make sense or does it not make sense? And can you defend it with some realistic data that is backing it up? For the second one is structure. Structure is very, very important. How do I structure it? Now, in you understanding how you structure your model, definitely you need to understand the structure of the company. Where is the company coming from? And that's one of the reasons why most people usually go as far back as extracting a 5 years historical financials, 10 years historical financials of a company, just to be able to understand that structure, to understand that growth. As a corporate finance modeler, you also need to understand that. And the third one is scenarios. Now, when it gets to some assumptions, we really, at times, we cannot be 100% accurate. Let me give you an example. If you want to forecast for oil and gas company, let's say Seplat, I want to forecast their price per barrel. The truth is, you really cannot be 100% certain about the future. So what we do, we incorporate different scenarios on best case, on worst case, on different cases. Oh, revenue will grow by 5%. Then you can build different scenario around it if you're not 100% certain. So 3S, financial modeling. Remember, I said this was developed by David Brown Consulting. So you must always have a story, have a structure, and also create that scenario around it. Now that you have this understanding, approaches of building, understanding how business work, right, which you need to incorporate these three. Artistic part of it, which also comes with these three. Let's now take a look at a typical structure of financial statements. So let me ask us, do we have any question? Do you have any question? Do you have any question? I hope you are still flowing together. So in case you have any question, you can click on your hand too, or just type in the chat box. Yes, that one can also work. Are we good? Are we good? Are we good? As I said, we are currently recording this so that you can always revisit as well. And if I'm too fast, just call my attention to it. Let's now discuss what we call business cycle and accounting cycle. Now, everything about business and accounting was built around this business cycle. And when we say business cycle, first question you need to ask yourself is, what do I think business cycle is saying? What do I think accounting cycle is saying? Right? So because of our time, I would have asked us to type in the chat box, but let's move fast. Now, business cycle is basically telling us about the whole thing about business. Now, irrespective of the business that you do, one thing is very, very key to every businesses. Can you guess? Just type it in the chat box. Irrespective of the business that you do, one guy is very, very important. But we call it, is more like the king of every businesses. What do you think that thing is called? Let's type in the chat box so that we make it interactive. What do you think that thing is? It's very, very important to any type of business you are doing. In fact, we call it the king of business. Definitely that is cash. Exactly. Any business you are doing and you are not getting any return, and that return is being measured in form of cash, then it's nothing. If you are saying, no, this business, this investment, I'm going to get a return of 10%. If that 10% is not in cash or something that can be turned into cash, then there's no benefit. So cash is very important, and that's the whole concept about business. They are trying to manage it such that they can have more cash to people that have invested, and the business can still be growing. Now, once you have that cash, you need to have what we call operating assets. The business cycle always starts with operating assets, which means any business you are doing, you must always have operating assets. Operating assets could either be a current asset or a non-current asset. But as long as you are using it to generate more revenue, it is known as operating assets. Cash itself can be an operating asset. A company that is into manufacturing, their property, plant, and equipment that they use in doing that production is also known as operating assets. Stock itself, someone that is selling provision, all those inventory, all those stocks, they are operating assets because that's what is selling in exchange for what? For cash or benefits. So it depends on the type of business you are doing, but you must always have operating assets. Cash itself can be an operating asset. The company that their own is they are trading, they give loan out to people. That means the operating asset is what? It is that cash that they give out to people. Right? Now, that operating assets, you now turn it to generate revenue. In generating that your revenue, definitely there will be some expenses that you also need to incur. Maybe cost of getting your products, right? People that you employ, you need to start paying them salary, administrative expenses, and all those things. You deduct it from your revenue to get your profits. Now, once you have your profits, you now convert these profits back into cash. Now, profit is different from cash. For we accountants, we do our the recording of our transaction based on our what and our accrual concept, which means immediately that transaction occur when the benefit is being transferred, we record it that, oh, yes, this transaction has occurred. But it does not mean cash was involved immediately. So that's why we usually have what we call trade receivables, which, people are owing you money. You've transferred your benefits to them, but they are yet to pay you in cash. So which means you need to convert your profit into cash, which now becomes the benefits and the returns to the business. You don't just leave the cash idle, you reinvest it back into the operating asset so that you can generate more revenue, more profits, and be able to get more returns. Saying, oh, we are sending cash on errand to go and do what? To generate more. On the part of accounting cycle, they are just helping us to record this. Accountant, they will record the operating assets in the balance sheet. Your revenue and expenses, you will always find that in our profit or loss account. And our cash analysis will be in our cash flow statement. And this is what we call accounting cycle and business cycle. Now, irrespective of the business, irrespective of the type of industry you fall into, this is still the same thing. This applies to every type of businesses. And we'll see how by the time we are analyzing the company financials, you will see how we also try to understand how they make use of these three guys as well. Now, with this understanding, let's look at the structure of our typical income statement, also known as profits or loss account. Some people call it statement of comprehensive income. Don't mind, we accountant. Just have not plenty name that we call it. Some people say it's profit or loss account. Some say profit and loss accounts. But for the purpose of our own, let's call it profit or loss account. Now, revenue is like the umbrella of every business, which means you need to generate revenue. And it's like the umbrella of the business. Even a non-governmental organization still need to generate revenue. Now, we also have different names for this. Don't mind, we accountants. We just have different names for line item. Revenue is the same thing as your income. It's the same thing as your sales. Revenue is the same thing as your income, and it's also the same thing as your sales. What other name can we even call it? Don't just mind us. So revenue is like the umbrella, and everyone is eating from a business revenue. So I want you to understand that clearly. Revenue is very important. Everyone is eating from the revenue. It's like the umbrella that covers the business. Because once revenue stop coming in, then everything stopped. And in you generating that revenue, definitely if the revenue is head, then you need a neck that is holding it. So which means that is what we now call our cost of sales. So I want you to understand all these line items. So by the time we go into the practical, we go to the artistical part of it, you can relate with it. Revenue is like the umbrella. Everyone is eating from the revenue. Now, revenue has a lot of drivers and a lot of things that can affect it. We take a look at that by the time we get to the practical aspect of it. Cost of sales is like the neck. Because if you don't incur this cost of sales, you might not generate the revenue. The company that is selling a product, let's say Nestle bottled water, which means if you don't buy the bottle, if you don't buy the pack, the packaging, all the nylon, all the bottle cover and everything, then there's no way you can get that stock out of your store and sell it. So all those they form the cost of sale, because if you don't incur them, there's no way you can generate this revenue, because it's like the neck. So now organizations try as much as possible to manage that cost of sales so that they can incur more to generate, they can incur less to generate more. And then we have our gross profits. So gross profit is the first profit that is being recognized in the business. So when it comes to profit or loss accounts, always keep in mind that you can only have three line items in your profit or loss account, also known as income statement, right? You can only have 3 line items. Number one is either is an income line item, income, also not, can even say it as inflow, or is an expense, which means outgoing, right? Going out, or is a profit line. So anytime you deduct any income from any expense, you always have one profit. So anytime you deduct any profit from whenever you deduct any expense from any profit, you always have one profit line. Let me say that again. Anytime you deduct any expense from any revenue, you always have one profit line. Or anytime you deduct any expense from any profit line, you always have one profit line. And a very good example, revenue is an inflow, cost of sales is an outflow, right? Then you have your profit, which you call gross profit. Now, this is what we call a top line item for an organization. Top line item, because these three needs to be managed very well. Because that gross profit now becomes the new net revenue after we deduct our cost of sales. That means, oh, that is what everyone will now be eating from again. You have the revenue, which everyone was eating from. We said, oh, cost of sales, it's directly, because we need to, if we don't incur that cost, we will not get the revenue. We deduct that, we have our gross profit. Now, the gross profit now becomes another umbrella that everyone below it will now be eating from. And the first people that we eat, people that are supporting the business, we call them selling general and admin expenses. Selling general and admin expenses, SG&A, is still the same thing as operating our operational expenses, OPEX. And remember what I said? You can only have 3 line items in your profit or loss account. Either as an inflow, outflow, or a profit line item. And here, if you deduct our SG&A from our gross profits, we are going to have what we call EBITDA. Now, from revenue down to EBITDA, it is what we call the core business operation. Now, we usually break it down. When it comes to management accounting, they will say cost of sales is the same thing as we call it variable cost, the cost that changes with your level of output. If we are producing 10 units, that cost will increase based on that 10 units. If you increase it to 100, that cost will also increase. Now, the second one, SG&A, also known as operating expenses, we call that one fixed expenses. Fixed expenses, it also grows, but it does not grow the same way our variable costs kind of grow. So you have that. From there, we call this the core business operation. Then we deduct our depreciation, amortization, which basically the use of our assets. And then we have our operating profits. We have our operating profits. Then every other thing can now come below this. Other income, maybe the business is also generating from other sources. It comes in here. Finance income, maybe the business is you deposit their cash in the bank. Bank will definitely give you some return, or they are using it to invest in some other investments. We have the finance cost. If the business is using loan, or they have some financial liabilities that they need to pay interest on, finance cost comes into play. And this also deals with the financing and investments of the business. Then we have our profits before tax, and we have our tax expense being deducted, which goes straight into the government, and we have our profits after tax. Now, remember we said from our revenue down to gross profit, that's what we call a top line item. And from our SG&A down to our what? Profits after tax is what we call the bottom line item. Right? So we're still going to discuss financial statement restructuring. And by the time we get there, we are going to look at this more and also have further discussion. But one thing I want you to know, from depreciation down to our tax expense, this can be influenced by management's decision. This depends on the management decision, and that's why you can see from our revenue to gross profit is we call that our top line. From revenue down to EBITDA, we call that the core business operation. Now, with this, let's now that you have this understanding of this structure, what we're going to do now is, this will be more practical. We are going to use a company as a case study. As I said, I'm going to make this very, very practical and basic. So let's use Nestle Nigeria. I believe you all know Nestle Nigeria, right? Please, in case you don't, if you know Nestle, just click on your answer. Do you know Nestle Nigeria? Do you know Nestle Nigeria? You can type yes in the chat box so that I'm sure we are on the same page. Nestle. Do you all know Nestle? Do you know Nestle? Okay, all right. So let me see. Let's look at their product. So Nestle Nigeria product. So some of us might know their product and you might not know they are the one that produce it. So let's take a look at it. Okay, so I think they are the one doing Nestle Golden More, Maggi, right? Nescafe. Let's look at the pictures. Maybe the images we really have. Okay, yes, good. So you can see some of their products. So I'm quite sure you know them. Yeah, I'm sure you know them. At least we all know Milo. You know Milo, you know Cerelac, you know Golden More, Nescafe, Nestle bottled water, right? And the whole thing. I think they also have they have great products, right? Milo, Milo, we all know that, right? So let's download their financial statement. So Nestle, let me just start. Nestle Nigeria, annual reports. So for I think 2021. So let me just work smart. I'll just type PDF. Okay, someone is currently taking Milo. You can see. I did not invite us. So I'll just try and download this. Let me save it on my desktop 2021. I said I'll make this very, very practical. The recording will be made available. Don't remain small for us. So. And in case you want to download any financials from any company, right, just go to their websites. You can look for their websites on Google, then go straight to their investors. So under investors, you always see their reports, financial reports, full year reports, and the whole thing. So you just click and you can also download directly, or just work smart like I did. Type the year you want and just put as PDF. So you just go to Google, just type download Nestle Nigeria annual reports 2021, then put PDF at the end of it so that it can just bring it out for you straight. All right, so I'm going to open that. I'm going to open this. I'm going to open it. Let me open this. And I will scroll down straight to their financial reports. One thing about corporate finance is by the time you are done building your model, you still come back and read through all these reports. Yes, it's not easy to be a corporate finance modeler. And trust me, if you have this skill, you are hot cake. Yes, you are hot cake in investment banking world. So let's take a look at the financials. Let's look at their profit or loss accounts. Okay, good. So statement of profit or loss account. So what I'm going to do is I also create let me open a blank Excel. You can see that I'm actually doing everything from scratch. Yes, this is the way you also do your own. So I'll open a blank Excel. Let me open a blank Excel here. Let me open a blank Excel and let me just highlight this first 3 cell. Let me just collapse it a little bit. Let me expand this. Let me rename it. Let me rename this. Let me just call it IST. So historical. So historical. So this is more like the approach that I usually work with whenever I want to build a typical corporate model. So here, I'll just call this one. Let me zoom out so that we can see. Please, if you have any question, ask. Yes, ask as much as you can ask. So historical, let's call this historical financials. Historical financials, right? Then I can call this income statement. About best, you can see your face. Seems you mistakenly turn on your video, or you want us to see your face. It will be great. So maybe let me just put this in something. Okay, so just me doing some design work, but it's always good. Most times it's very professional when you add something like this to your model, but don't overdo it. Okay, so what we're going to first do is we try and get their 5 histories. So I'm going to do an example for you, and I would really like us to take our time. Let's do this on our own as well, right? Let's start with the first one. So here, this is 2021 and 2022. And I'll come here. So now imagine, I actually want to copy this, but I don't want to be doing it one after the others. Now look at this. If I come here, okay, let's see, because this is also very important. We hope this is not passworded. Hope this is not passworded. Okay. So I actually want to copy this. Look at what something funny is happening here now, which is actually, let me see how this will work. Okay. So now the trick that I want to do now is this. The PDF must not be passworded. It must not be a photocopy PDF. If not, you will not be able to do it. I actually want to copy this now. So look at this now. I want to copy this revenue now. You can see that I'm unable to copy. So if I copy from here, see that it's leaving that revenue out. So we just need from our revenue down to profit for the year. If I copy this, Control C, and I come to my Excel and I type Control V, look at what happened. Just scatter everything, right? And I actually want to work smart. So one other thing I can do is I'll come to this first line, so I can copy it column by column. So I don't know why the revenue is not copying. So that means this was something like somehow typed or something. They're supposed to copy it from Excel and put it in a good table format for us to copy. But in case you see it like this, that means it was not done that way. So let me just copy from here. So let me zoom out for us to see. Now, my own PDF is kind of editable. So which means you can say I can click on before this letter C as if I want to actually type in front of it. But some of us might not be able to do that. But in case you bring your mouse close to this letter C, your cursor sign will change. Press Alt and click your left mouse. And I can just drag it downward. So you can see what we have now. So it seems some of the line items were actually copied. So what do you think we need to do? So this part of where your work also starts from. So that means we need to type this one after the other. So let me work smart. I can just divide my screen into 2. Window, my left arrow, so that I'll put this PDF, and let me reduce it. I'll put my PDF like this. Then I'll click on my Excel. Window, the right arrow. Then I can select this other one. I can have both of them beside each other. So we're going to do it so that I can see the difficulties when it comes to corporate model. But trust me, if you are good doing this, trust me, you are hot kick when in finance world. So cost of sales. Don't mind me. I know how to type fast, but I think I'm getting slow nowadays. I don't know. Maybe because of my teaching, they said I should always try and slow down. But uh, let me see if I can still. I think I'm still fast. Right. How many of us did Murphy Beacon? If you know Murphy Beacon, let's type in the chat box. If you know Murphy Beacon of those days, it's like a game. Yes. How many of us did it? Did you get your certificates or you did magic? Did magic? Yeah. So results. Yeah. Results from operating. So you did not get certificate, or you just did that magic thing. I remember then, yeah, that chameleon game. I remember then my brother would be laughing at me that don't worry, be deceiving yourself. By the time you get a job and you are using 1 hour to type something that you're supposed to use 5 minutes to type, your head will be correct. It was actually a good one. Yeah. So profit before income. So anything you want to do is always good. You kind of learn it the right way so that it will not become difficult for you. So net finance cost, profit. Okay. So income, tax expense, and of course, when you are typing, you're not expected to be looking at your keyboard. Yes, I always respect those secretary, those typists of those days. You know, our own, you can still do mistake and just go back and clean it. But then in those days, you do any mistake like this, you need to start over again. Just imagine that kind of thing. Okay, so let's see. So for one thing I also want us to notice this. For accounting, they usually have their current year to the left side. Yes, I'm facing my screen now, so more like my left side. But when it comes to finance, is the other way around. Is the other way around when it comes to finance. Okay. When it comes to finance, is the other way around. So which means, let me create a gap here. I'm going to call this my 2021, right? And this 2022. So I can, okay, this is supposed to be 2020. So I can even format it to show Control 1. I believe you know this, basic Excel. Yes. So just click on this. In case you don't know much about this, I have some videos on my so financials. Okay, so F represents financial and H represents historical. So in case you don't know much about this, you can check my YouTube channel. I think I treated this on when I was teaching how to build a typical templates, yeah, for a financial model. So I can even make this look good. Let me just shade it in one good color. Don't mind my artistical work. But it's always good to kind of make your work look professional. Yes. Okay. So now let me try and see. You can copy these figures. Okay, great. So I think it works for this. So let me just show us this now that it works for this. So I want to just copy all this 2021. So I'll bring my cursor close in front of these three, right? My cursor will change to a straight blink. Press my Alt and my left mouse, right? And just drag. So at times it can work fine. At times it might not work fine, which means you might end up having to type this one after the other. Yes, it's part of the work. So let me copy this. I'll come here. That's for 2021. And I'll paste it like this. Right? So the second one, let me also copy for the second year, which is 2020. Just 2020. So let's copy it and I'll paste it like this. Right? So let me format it so that we can have, so you can just, let's just use our normal accounting formatting. So you can select a comma here so that it looks like this. Right? But maybe we want the one that is red, the one that is a negative to be red. Let me just do that. So you can always, I believe you can learn that. Those are just basic formatting in Excel. Right? So that those ones that are negative, we can have it like this. Just add one decimal in front of it, right? So gross profits, okay, what happened? Look like we've missed something out. Let's look that. So revenue, so that we missed something out. So revenue, gross profits. So you need to cross check because you need to copy the right thing. Okay, good. Now that's nice. So all values in thousands. So depend on your own approach, right? But most times I usually like putting my own here. So Naira and set as in thousand, right? So 1, 2, 3. So you can put it by the side like this, or you prefer to put it at the top like this, right? Depends on you. So I think this style is more like accounting style, but this style is more like our own modeling style. So anyone that you feel like. Right. So for the purpose of the training and because of our timing, I'm just going to use these 2 years as a sample. Now, I will encourage us try and download their last 5 years historical financials. Please, let's take our time. And against our session tomorrow, I will like if one or two person from the meeting can just explain and run us through what you think the performance of the business has been over the period. I'll just do good example for us. So here, gross profits. So this is the gross profits. So let me just make that bold just to make it look good. I can switch off my line. You can use shortcut or go to your view. Go to your view tab. Under your view tab, just click on grid line. So that grid line just disappear. It just look like a typical notebook, right? So I'm just going to put one, maybe just a border up here. So we know that, yes, this is more like profit. So let me put a border up and a border down. So results from operating activity, put it here. So net profit before, so we need our profit before tax. With that, then we need our profits after tax. Right? So now you can see that currently now, everything that we have here, they are just what? They are hard-coded. They are hard-coded. Right? So which means we need to put the appropriate formula first. Now, in putting the appropriate formula, for example, you are saying, so I'm going to put the sign here. So let's just look at this. So revenue will be plus, right? We'll be adding it. So let's do this first. You're just trying to be professional. This is not a must, but it's always good. So you know your cost of sales, you are deducting it. Your gross profit equal to, that will be something minus something. Your marketing, you are deducting. Your administrative is an expense, right? So remember, as what I mentioned, that you can only have 3 things, 3 line items in your profit or loss account. Is that income, which will represent as plus, or expense minus, and then you can have your profit line, which we recognize as equal to. So finance income, will that be plus or minus? Let me see that we understand that. Finance income, will that be plus or minus? Type in the chat box, so I'm sure we are still together. That will be plus, right? Finance income, expect that to be income. Finance costs, that should be minus. Net finance cost is just a summation of these two guys. So if you look at it, so anytime you highlight something in your Excel, this 46546, and I highlight it with this 4626. If you look down here in your Excel, so this, I just highlighted these two. So if you look down here in your Excel, you will see that it's going to give you the average and also going to give you the sum. So you look at this sum and you look at what we have here, you can see that it's the same thing, right? So which means we don't really need this net finance. So I will just delete it and delete that row. So this one equal to income tax minus then profit for the year equal to. So we have this, right? So now, based on our financial modeling standard and based on financial modeling best practices, it's saying whenever you build your model should not have a negative value. in fact, I think it is still based on IFRS standard that we are using this in our own Nigeria. But overseas, when you take a look at their financials, anything they are deducting, they don't usually put it in negative again. Because before that, they used to do that, but I think now they are kind of adjusting it. Now, financial modeling standard is also, whenever you build your model, all the values in your model must always be in their absolute value. And the next thing you could do is to just add a description. So maybe you come here, maybe your cost of sales, and can just type, oh, less cost of sales, less your marketing and admin, less, and stuff like that. Or you could also do the same sign that's what I did by the side. So which means for our own, right, and also for the benefits of our analysis ratios that we need, so that some will not be giving us negative. Everything can be in their absolute value, which means we need to remove all the line items that has negative and leave them in their positive value and put our appropriate formula. So I'm going to do that one after the other. So here you can actually highlight everything at once and remove the negative. So highlight it, press Ctrl H, find and replace in your Excel. So you look for negative and you place it, just don't type anything in the place and click replace all. But or at least for our training purpose, let me just do it one after. So I'm coming here. I would delete this negative here so it becomes positive. And I'll come to this, my gross profits, and type equal to my revenue minus my what? Minus my cost of sales, enter. So I'll do the same thing, remove this other one, delete that, come down here, type equal to my revenue minus my what? My cost of sales. Now, remember, irrespective of anything you do, this is your profit for the year, must always be the same thing. So I can just copy this guy and put it somewhere here so that I can use this to track and check that, yes, it's still the same thing. Right, so I'm just going to highlight everything. Let me highlight it. Control H. I'm looking for what? I'm looking for, I should look for negative and replace it with nothing. Please replace all. Click OK so that everything goes back to the absolute value. I can come here. So if let me add one line item here. So maybe we should call this our SG and A. Right? So for our SG and A, it's just the summation of your marketing and distribution and admin expenses. So it's just the summation. So equal to my marketing and admin plus my what? My administrative expenses. So I can just highlight both of them like that. So let me put it in, let me also add a border to it. So it's actually the same. It's just the summation of the two that we call our SG and A or OPEX. So anyone is also, or you call it OPEX. Right. Right. Okay. So now my results from operating activity is the same thing as what we call our operating profit. So let me just rename it. Now, in case you do any adjustment like what I've just done, like this, you can always add a comment. So right click and you see new notes. Your own could be comment, depends on the version of Excel that you are using. So I can see, I need to put my name. I'll say rename to operating profit. Now, what this kind of allow you to do is, by the time you pick the model again, most time when you are building a corporate model, is that time that you're actually doing that adjustment that you remember. So you might have forgotten to remind you. Someone else can also pick the model and understand what you've done. So anytime you make any adjustments to, or you change something, and it's not the same way they have it in their annual reports, you always need to add this comment. So when you take a look at corporate model, you always see this red comment there. So by the time you hover your mouse on it, you see the comment. So let's just rename this to our operating profit. You remember that our profit or loss account that we checked. So that will just be equal to, I'll just do my gross profit minus my AG and A. Then I have that. For my finance, my profit before income tax equal to my operating profit plus my what? My finance income minus my finance cost. Put the formula. Then for my profit for the year will be profits before tax minus my income tax. Now drag this and we have that. So is it the same thing with what we have? Let's look at it closely. Is it the same thing with what we have? Is it the same thing? It's what we have in the annual report. So in the annual report, let's look at it closely. So I think we're having a difference of 1 in 2022. So you can see 40, based on what we have in the annual report, we have 40,037,2778, and here we have 40,037,278. Now, most times you usually have something like this, so it's always good you take your time to put the formula first, and at times this is due to just some Excel rounding thing, right? So usually have something like this, but whenever you have something like this, it's always good you just look for one line item and try to adjust it so that it gives you the same result that you have. So maybe let's put this to 1. Okay, so maybe we're supposed to 81 or maybe 82. Okay, good. So that you have the same thing. So it just could be due to some rounding error. So for something like this that will change, you might just add a comment. Just put that comment. So added 1 to balance it with what they have in the annual report. So now that you have this, so as I said, your our own task against tomorrow, and I will encourage us to take our time to do this, right? So call this income statement. So maybe I'll just call this so okay, let's call that, let's leave that income statement. Then let's now call this analysis of the income statement. Right? So now let's take it one after the other. Let's discuss what are different KPIs that you can use to measure the performance of income statements. Anyone. So one thing I also like us to always utilize is shoving of the internet. This is very, very important. It will really, really help you a lot. Yes. So here, I can come here and say, and just search that let's say key performance indicator. Key performance indicator for income statements, or to analyze income statements, anyone. So you can take a look at different metrics that you can use to analyze your income statements and what each of them, what they mean. So, but you can always do that on your own. The first one, let's look at the revenue growth, right? Revenue growth. Which other one? We'll look at cost of sales margin. Cost of sales margin. We can look at our gross profit margin, right? Then let's look at their SG&A. SG&A. Okay, let's call it OPEX to revenue margin, right? Which other one? So we can look at our operating profit margin, right? So which other one can we look at? Which other one? So we can look at their profits. So profits before tax margin, PBT. Then we can look at their, what is their income. Okay, we can look at their tax rate, or let's just look at net profit or profit after tax. We call it PAT margin. So now let's look at this. So I think I'm going to give us 2 assignments, and please, I would like us to do this. We can do it. We can decide to do it as a group, right? But I just want to see that presentation of, hey, what do you think this is actually saying? So I think let's put this here up here. So let's put this here. So let me bring this down so that we can have the headings constant. So I can just, let me copy these headings and let me put it here. So maybe I call this here flat, yeah. So know that is here. I can remove this. Then I can freeze this panel so that by the time we scroll down, you can still be seeing the year up. Okay. So revenue growth. So we are also encourage us to go back as 5 years if possible. So equal to, I look at current year revenue divided by previous year revenue minus 1. So I put that in percent. So let me just format everything to be in percent. So which means between 2021 and 2019, the revenue increased by what? 22.6%. And which means now need to look, as I said, you go back as 5 years. Look at what has been their revenue growth. Yes, this is very important. So cost of sales margin equal to, let me just work smart, let me work fast. So my cost of sales divided by my revenue. Or you are just dividing all the line item by revenue. Remember I said revenue is like the umbrella of the business and everyone is eating from the business revenue. So gross profit equal to, that means our gross profit also divided by what? Divided by our revenue, because revenue is like the umbrella of the business. So that's why we are dividing everything by revenue. I think. I'm not sure I did that right. So gross profit divided by what? By our revenue. What's happening? What's happening? What's happening? What's happening? What's happening? Let me delete that. Let me do it again. So our gross profit, seems my Excel is acting funny. Gross profit divided by our revenue. That's okay. Good. Is our week now. So OPEX, operational expenses to the revenue, that will be equal to our total SG&A divided by our what? Our revenue as well. I think it's taking its time to load. So operating profits, or maybe I should do it one after the other because I'm doing it together. So equal to our SG&A divided by our what? Our revenue. Okay, so it's still doing the same thing. I don't know. Okay, now it's a week. I'm not sure it's on this thing is on. Okay, so operating profits, which is operating profits divided by our what? Divided by our revenue. Then the profit before tax divided by our what? Also divided by our revenue. Everything is being divided by the revenue. As I said, revenue is like the umbrella of the business. So profit after tax divided by our revenue. So we have this. Okay, that's good. Now, this one thing I now want us to do. Take your time against our session tomorrow. I will encourage us. We can do it as a group. You can share it within ourselves. Look at the trend over the 5 years, because when it comes to corporate modeling, most times we depend on their historical trend performance, which we use as a base to forecasting the future. So everything being equal, right? When it comes to you analyzing a company performance, number one thing is you need to understand that there must always be a comparison. So maybe you say, oh, we are comparing Nestle. So I think we're supposed to even put the name of the, so Nestle Nigeria PLC. So let's put the name of the company. It's good. It's always good to put the name of the company. So let's just put any color for at least. So we always rely on the trend, on the historical trend. And as a corporate organization, you are expected to have a consistent trend. And that's why we need to first understand, hey, what has been the historical trend over the historical period. When they say, oh, this industry, this is their benchmark, that means they've taken a look at the historical performance of all the companies in that industry and be able to come out with that trend range. So there's some companies that, oh, their gross profit margin is always within the range of 50 to 60%. So there's no way you see their gross profit margin growing beyond that for a typical mature company, which is what we now leverage on. So as I said, your own assignments, I would like us to take our time, extract over the 5 years. Yeah, right? Do this analysis and look at story that you can tell from it. So for a very good example, let's look. We said, oh, revenue increased by 2022, between 2020 and 2021 by 22.6. Oh, This could be due to in 2020 there was pandemic in the whole economic, which kind of, but before you be able to say that, you need to look at what was their revenue in 2019. If that was a fall, if there was a fall in 2020, or the growth was not as compared to other period. 2020 there was pandemic, and we think 2021 the economic starts picking up. Maybe the company also introduced new products, and you should need to be able to tell that story at first. Look at the historical financials, go online, shop the internet, be able to tell one or two stories about the organization. What do you think really happened? Now you go to their cost of sales and look at the cost of sales. Oh, is it that the same rate at which revenue increased, cost of sales also increased the same range? You also need to check that. Oh, in 2020, their cost of sales was 50, cost of sales margin was 58.5, right? And in 2021, what happened? It increased. Wow, because revenue also increased, so it is expected, because cost of sales is a variable cost, is expected to increase the same way production output also increased. Gross profit for 2020 was 41.5. 2021, it decreased. Why? So you need to be able to tell that story. Look at it. Their operating expenses to revenue in 2020 was 19.1, and in 2021, it decreased to 17.0. What's the reason? Do you think, oh, maybe the company had to manage their cost efficiently, right? Considering what happened in 2020. So yes, the revenue increased, but they tried to manage their costs such that the operating expenses did not increase as much as the growth in revenue. As I said, of variable of fixed costs don't usually increase with the level of output. So this is more like a good management. Operating profits, you take a look at, if they fall within a range, that means you're saying, yes, this company is good and is predictable. I would like us to take our time. So profit before tax, also understand what's this metric saying. What is the whole story over the past historical years? And that will now help us in telling the whole story. So please, I will encourage us, let's take our time. You can do it as individual, or you do it as a group, right? Take your time, extract maybe over the 5 years, and even if you can take it a step further, compare. I think Nestle, then you have another company that they are in the same industry, maybe Unilever, or I think we also have this other one. So just check them out, right? And do that comparison. Oh, Nestle revenue increased by in 20, between 2020 and 2021 by this so. Looking at this other company, their own revenue increased by this, but their gross profit margin still, they maintain this same range as compared to, so you'll be able to tell that story. And that's what we do when we come to corporate finance modeling, the real one, because this is more like the benchmark that will guide you in getting your assumption. Once you can tell this whole story and you can put them together, right? So please, I don't know, you maybe just maybe one or two person can just do the presentation. Maybe some sets can compare the historical 5 years, right? Some set of people can just take the 2 years of Nestle. I take another one for another company, right? And maybe PZ, maybe Unilever or UAC, or take them and compare them. Why some can go ahead and do over 5 years and just tell us the story and do the presentation. Do you think we can do that against tomorrow's session? Do you think we can do that? Will you guys, or you guys will just discuss within yourself and let us know how that would be? What do you think? What do you think? Israel, what's your take on that? What's our take on that? We can unmute your mic as well. Just type in the chat box. What's our take? How do you want us? How do you guys want to approach the task?
Hello,
Okay,
good
yeah,
evening, sir.
our best. Yes. Good evening.
Yeah, thanks so far for the explanation. I don't know, will you be able to get the section, the recorded version of this
Sure.
tutorial?
Yeah,
finish
sure, sure.
after this.
Yeah, this will be recorded.
Okay,
This will be
okay.
recorded and shared with us.
Okay. And as pertaining to what you said, it's not a bad idea if you could do that.
Okay. All right. So let's take our time and let's do that so that maybe 1 or 2% can just share something with us tomorrow before we go straight into the balance sheet parts. Right. So even in fact, if you go past 5 years, you can even use this. You create a graph. You also tell that story of hey, this has been the trend over the past 5 years, and also it's all about that story which you need to first understand and say, hey, this is where this company, this is where they are coming from. For example, taking a look at this, let me take one now. Look at their OPEX to revenue margin, right? So which means over the last 2 years, 2020, 19, 2021, 17. Now, which means if you now want to do your own forecast for 2021, 2022, right? And you are now saying that, oh, their OPEX will be 35%. Automatically, when we take a look at this, we can tell you that this might not be possible because the last historical trend, within the range of what we've seen the business doing over the past period, they've actually not gone up to this. So it is that trend that we actually use as our base. So it's always important that you understand the story. If you see that there's any change in that trend, what really happened in that period? Take your time to first study, understand the historical, because that will guide into doing the future. Right? So, guys, thank you. This is where we'll be stopping today. It's just an hour session. All right. And I trust you've actually enjoyed this. Right, let me hear. Do you think this makes sense? Do you think this makes sense? Do you think this makes sense? Right. So we're also going to share the recording with us after this session. So do we have any question or you need further clarification before we call it a session? Any question, any contribution, any clarification? I hope you enjoyed it. Yes, there's still more to go, but the more of the work lies in your own hand, right? So remember that the more you do, the more you practice it, the more you get better at it. Yes, corporate finance is not beans, and it is a whole lot of work. So guys that are very, very good, they always do a lot of shakara. Yes, trust me, trust me. Working as you sound corporate finance modeler, your salary is not beans. I'm telling you. I'm telling you. I'm telling you. Yes. Yes. Okay. So all right. So big thanks to every one of us. Thank you so much. And let's take our time to reflect on what we've done. I'll try and share the recording after it has been processed with us. All right. So I'll send it to um, Israel, and Israel will share it with everyone. All right. So let's take our time so that tomorrow and just have a run through of what you guys have done. And we go straight into the balance sheets. Right? So thank you, everyone. And let's enjoy the rest of our evening. And bye for now.
Bye.
All right. Okay. Bye. So you'll see. Bye, everyone. Let's enjoy the rest of the evening.
I no go there, I no go there once I on the ways. I follow there, I no fake on the look with your face. I'm over, belle beg on fit to in your case. So I no go there, I no go there once I on the ways. I follow there when money get it. So no go there, so